Okay, today is April 10, 2014. Well, we got the answer that we were waiting for yesterday. We remember yesterday's video asking the question about, the move the last couple of days. Is the move is a dead cat bounce or it's a termination of the current pullback, the recent pullback, and it's a reversal and going back up to take out the recent high. Well, today's price action certainly, gave us that answer, at least based on what have transpired today. And we're saying that we're basically just waiting for today to see what the price action look like, and we probably will get an answer from that, on which general direction the market is going to move in the near term. So you can see on the S&P 500, we're talking about that it was coming up here, like I was saying that we exceeded expectation, and it came back up here to this 1872. So you see that, we're saying that, well, it might be, if it's going to continue that move, then it probably will move up here to this 1878 level. And if it's not, then it will come down. And also the other thing is I was saying that if it come down, this will not be a support anymore, because I said, if it come down and break below this, 1848, 1850, then the chances are you're going to come down and tag this March 3rd low, which is somewhere around the 1834.44. So you can see that actually came down and penetrated a little bit and sort of close near that level right now. So we'll see tomorrow, because right now, essentially, we're talking about maybe this thing will come down and tag this particular pivot level here, somewhere around the 1820. And if that won't hold, then most likely we're probably going to come back down to below this 1800 level and possibly, maybe get it somewhere around here. So that would be somewhere around the 1794, 1795 area. So that's the S&P 500. And if we also take a look at the spider, right? The spider we were mentioning about yesterday, that the spider, the ETF actually trailing the cash index a little bit, because the cash index was pretty much up at this level here, at this peak here, and the S&P, ETF, the spider is actually below that. And we're saying that if it's going to come up, maybe it could come up and tag that, or the best case is again, make it up to this level somewhere around this 188, then pull back, and maybe we'll test this support. If it's hold this support, then the chances are it probably will come up and take out this, these new high. But you can see today, it didn't even have a chance to come up and try to test yesterday's high, and it just retreated back. And right now, we're talking about coming down and tag this, March 3rd low here at this 183.75, and you can see that actually went below that. There was one time that they were trying to push it back up and try to close at, or at least try to spook some of the short, trying to make it appear that it might be holding that 183.75 near the close there, but it actually, after just a brief, moving up there, it just kind of, gave up and come back down. So you can see right now we're essentially looking for that possibility of maybe coming back down here at this level somewhere around this 181.68, this pivot low here. So, and that's basically what we're going to keep an eye on. Or, if at most, it might be coming back up and maybe, test around this particular support a little bit. Once again, remember we were talking about this support level is no longer in play, because if it's going to hold there, it shouldn't even come back down near that. It should have been, just stay up here and then probably take out the previous high. But as you can see right now, the price action seems to be pointing a little bit lower, and this is a big ugly candle here. It just took out 2 days of gain. And so right now in one single swoop. So essentially we're talking about, kind of monitoring this 181, 182 level here to see what the next price action is. Because there could also be, somewhere around here as well. That's why, this 182 is also could be in play as well. So I just kind of keep an eye on that. Tomorrow's OPEX, weekly OPEX expiration. So there's going to be a little bit more, some, jerking around here. So, but as you can see with today's action, a lot of the, option landscape have changed. So, we might see a different scenario tomorrow in regard to the pinning and that kind of stuff. So wouldn't be surprised to see continued downside tomorrow. And then if we look at the Dow Jones 30, again, the Dow Jones 30, we're talking about, come tagging up at this level here, this 16,457, 16,460 area. And you see that actually came up and sort of tagging that and then it came back up. Gave up and came back down. And then we're also looking at, potential support here is coming down here, these level here. And you can see that didn't have a chance at all. It seems to be giving a little bit false security here by, holding up this 50-day moving average. Moving average is never any kind of a support because you just have to look at it in coincident. It's just sitting right here at this level here. So it kind of, for people just watching it, the moving average for support, a lot of times they get, kind of misled. So you kind of got to look at that. And right now we're basically looking at the possibility of coming back down here, which is also, the March 3rd low. So we're essentially going to look at that particular level here. And it'd be somewhere around that 16,056, 16,060, somewhere around there. So those are the levels that we'd be looking at if it's coming down for the next level of support. And if there's any resistance, then maybe it will come back up and test this particular pivot here for potential resistance. Okay. And then on the Nasdaq 100, the Nasdaq 100 again, we're talking about the possibility of maybe come back up and possibility of tagging this guy since yesterday. Got this big, continuation move here. And as it turned out, it didn't even have much of a chance. It just kind of opened on a, slight negative and just kind of faded all down, throughout the day. And you can see that it just took out the gain from the last 2 days in one big swoops. So right now we're essentially looking for this guy to come down to this level here, which is somewhere around the 34.45, I believe, 34.40. So we are essentially looking at somewhere around here. Maybe we might get a little bit of a temporary support here, somewhere around the 34.65. So that's another possibility. But it's so it's going to be between this area and that here for the next day or so, and depending how it hold up, we might be looking at a little bit lower lower level. But for now, we just kind of keep an eye on this right now for the 34.40. Is that it's 34.40? Yeah, somewhere around there. Then on the Russell 2000, again, the Russell 2000, we're talking about it maybe, coming back and tag some of these pivot here, right? And so right now it's it can't even, similarly to the Nasdaq 100, wasn't able to get much of a test on yesterday's low because we were talking about maybe possibly, somewhere around also here, which is, I believe this is the March 3rd low as well. Okay, so. And right now it's essentially coming back down and we're tagging this particular pivot right now, this 1120, 1121. And if we can't hold that, chances are we're going to be looking at this thing to come down and test this maybe the 1094, 1095. Okay. So, but there's also, the possibility to come back and, kind of retest this level here, right? This 1146, 1147. Okay. But right now, with the way the price action is looking, chances are it's going to hover around here and then make its way down. Again, a lot of people probably be looking at this 200-day moving average for potential support. But in terms of looking at context, maybe this particular level here, so you can see that it's also sort of coincide with this 200-day moving average. So again, just don't look at the moving average by itself, but look at some of the support and resistance level or some of the pivot level to see does it give you some kind of confluence with those moving average. Right. Okay, and then if we take a look at the some of the stock that we've been following, the Apple, Apple was actually held up pretty well throughout the day until it finally gave in and joined the party today. And unfortunately, that's not the party that we would like to see. Some of us don't like to see, Apple join. We'd rather have them have it join the party yesterday, but it, well, it did. I mean, the previous day, 2 days ago. So, today it came back down, and it's, I do believe it's going to come down and tag this 515, 516 level here. probably going to test around this 522 because again, I'm basically looking at this, this band action, this trading band. So and it would probably get a bounce when Apple get near the quarterly earning because it just doesn't have any catalyst right now to push Apple to do anything. And since it's not following the market, so it's not going to be much of a play based on the market action here. Then on Facebook, again, Facebook, we're talking about maybe possibility of taking out this particular pivot and maybe, move up and then come back down and test it and probably, go up and attack this level here, right, this 65 level, somewhere around 65 to 64.90 area. But you can see we got a little outside candle right now, and chances are I think it filled a gap here, this little gap here, so it's probably come down, and fill this little, open to a low gap. I mean the close and the low gap here. But we're definitely going to see maybe Facebook in the coming day probably work itself down and retest this level here. You know, and then you can see that we maybe form a little bit of a H pattern. Then we could kind of play that H pattern down based on Fibonacci retracement, and we just get a little glimpse of what might look like if assuming this is this is the pivot here for that particular H, and if we put this up here, then we essentially are looking at somewhere around that 127 extension, somewhere around this particular pivot, and then the 141 that will bring us down to about 48, the 1618 that will bring us down to this particular pivot. So this might be a level that eventually will maybe come down and test. But again, you look at the 200-day moving average is also, sitting at this 127 extension. So there could be a possibility that we get a little bit of a confluence here and come down to somewhere around the $50 level, because this right here is we're talking about maybe getting down below 45. So those are only possibilities. Not saying that that's what it's going to do. And for those that's holding long on Facebook, well, what can I say? Anyway, let's go and look at Twitter. Twitter again, you see the weakness on Twitter. This is something that, it's like a salesman, waiting for making that 10th sales call, because the odds is, for every 10 sales cold call that he makes, the chances are he probably will close one sale. So it's just like we're waiting for that 10th call, and the same thing with this, Twitter. We're just waiting for this guy to come down to this 39 and get a flush and then see what happened, right? Because right here we're just kind of dangling, and what are you going to do? I don't know. I'm not going to do anything. Again, still remain on a watch list. It just came back and dipped below this 41, 42 level, so it just kind of work itself down. Slowly grind it down, and all those people that have been riding it down, average down. So you're just going to get frustrated with this slow grind. I think if you want to see any kind of possibility of a bounce, I would like to see it just, flush it down to 39 and see what happens. See, does it hold or doesn't hold? But the chances are a lot of these people that's been waiting, most likely they're going to sell off and, capitulate when they get down to 39. And that might be the wrong time, exactly the wrong time to sell. But, that's just my opinion. Anyway, so we take a look at Tesla. Right, Tesla again, we're talking about maybe possibility of getting up to this trend line here, tagging this 50-day moving average. You can see that, that little doji, right, the Greystone doji, I think that's what we call it, doesn't look that hot yesterday. Right? So you can see that it just kind of, remember yesterday I was saying that, most of the day Tesla was kind of negative until after the FOMC minute came out, it kind of pushes it up and have that guy turn green. Otherwise, it would have probably stayed in the red. And you can see today that weakness just resumed and it's just kind of come back down. So we're probably looking at testing this particular level here, this particular level right here. So essentially, we're talking about maybe filling this gap and come down, tag this pivot somewhere around 193. If it can't hold, then we come down and fill this gap, probably overshoot it, and we get down to this, 382 extension, this retracement up probably about that 172. But, there's a possibility it could come down to this, 193 area because it's close to that 50% retracement. So we might get a little bounce here, on the 50%. Right? Well, so maybe not that high, maybe bounce here, right, and then come down like this. So that's one possibility, and then it's kind of track this, this trend line down. Okay. So, and then we look at Google L. You see Google, we're talking about, well, it's kind of exceeded our expectation when it, went above that yesterday, and, didn't want to chase this guy. And then if it's any kind of continuation, we're probably looking at somewhere around this 580. But as you can see, that didn't, do much. It just kind of came up, and then kind of retreated. So right now we're sort of waiting for it to come back and test this particular level somewhere around this 540 area and then see, can this hold? If it can't hold that, then we're basically looking at this particular pivot low. So essentially it's this low here somewhere around the 530. And then just kind of, like I said, just kind of go and, start watching these pivot level and then see which ones stick to see where it might, find some support and wait for it to consolidate and then look at the price pattern and then decide to go one way or the other after a consolidation. So, okay, so that's another one. Let's take a look at Netflix. Netflix got hit pretty bad today also. So we're talking about, let's see, it's Netflix, traded this thing 2 days ago. Didn't trade that yesterday. Was it yesterday that I traded? No, it's this day here that I traded, on Monday. Okay, so is it Monday or Tuesday? Anyway, I traded this day. Okay, so we were tagging this thing to go to that 352, and yesterday kind of exceeded our expectation. Today actually opened up and ran a little bit. Then it finally gave in, so went out of steam, and then it's not coming back down. And essentially took back all the gain that it made for the last couple of days plus more. So you can see right now it's coming back down to this gap fill level. Chances are it's going to break that 200-day moving average because essentially it's going to break this support level here and probably work itself down to maybe possibly to this 313 and also that 300 level that we're talking about. Right, this 300 level, this pivot here. Right, so this right here. Okay. Right, so maybe we can see some intermediate support here, somewhere around this, 315, 317. So we'll see how this thing hold up. This could be a little bit of, testing here. Wouldn't be surprised me a bit, because there's a big drop here. We might get but I wouldn't think that it would come back up to this level tomorrow. If you're going to do that, maybe in a couple of days, then it might be doing a little bit of a, consolidation, and then maybe a breakdown like this. So it kind of set up a little flag, then we could kind of do a little bit of a major move on this flag. Then they say, whoa, we're going to go down to somewhere around 200. So let's hope it doesn't give a flag. Maybe it give us a little flag like this. I don't know. Anyway. Not much going on the financial. Right? If you look at the Bank of America, see Bank of America is still working on this, maybe on this little bit of again, this head and shoulder pattern, right? And the major move is somewhere. Oops. Right? No, not that major move. Right? Let's see. It's the this major move here. Because let's go back and redo my Fibonacci retracement and move this thing up to this baseline here. All right, so the major move is over here. So it is down here at this $15 level. All right, because that's 200% retracement. So essentially, we just do a major move on this this distance here to just move it down here. Okay, so tomorrow is going to be another day. Hopefully didn't get beaten up too bad today or got caught with your hand in a cookie jar. Because like I said, a couple of days ago when we see these dead cat bounce, it's only going to be a couple of days type of a quick trade. And if you don't have a plan or, don't have fast finger, then it's best to just stand on the sideline and kind of wait and watch the price action. This is a good time to also, you don't have to trade. It's a good time to just watch the price action and kind of learn and observe, some of the thing that's going on. and maybe that will help you in the future when when these kind of price action reoccur, right? And it will reoccur. It will occur again. So good luck to you.